Canada's inflation rate recently dipped to 2.8% from 2.9%. And I know that doesn't sound like much, but it's a considerable factor, that 0.1%, which is raising the stakes for the upcoming Bank of Canada decisions. Economists were a little bit concerned that inflation may increase beyond 3%, and if it did, that would have resulted in a longer delay until we see a little relief in interest rates. But due to the balanced decrease in the inflation rate, a potential mid-year rate cut is most likely on the horizon. This would affect mortgage rates and buying power, especially if you're looking to make a move in the next little while. And also due to this, we're seeing a vibrant market with home sales up by nearly 18% from last year in the Greater Toronto Area. What does that mean? It means 18% more homes are selling in today's market than they were at the same time in 2023. Listings also have jumped by over 33%, which does signal a potential for increased inventory of homes and ultimately should keep prices fairly balanced throughout 2023 as more people consider selling the home in this high interest environment. This is going to give buyers more options and opportunities in this dynamic market. With that said though, the average selling price in the GTA has already seen a slight increase to just over $1.1 million. From my personal experience, we're not seeing the same deals that we did in late 2023. Most of those have disappeared. We are still coming across some great opportunities, but not the same extent that we did in the last quarter of 2023. The stable price growth suggests a market finding its balance and a green light for buyers and a signal for sellers to strategize effectively if they're looking to come to market. Outside of the urban markets, recreational properties like cottages are seeing some positive interest, with prices across Ontario predicted to climb by about 8% after recent value decreases and a slower activity in cottage country over 2023. On the urban development front, there's been a recent uptick in housing starts. Housing starts refers to the number of homes that have started construction. February brought a rebound after a year of low starts at a 14% increase, signaling a bit of a revitalization in home building activities, particularly in urban centers. Despite this positive momentum, there still remains a gap between the number of new homes being built and actual demand. Affordability issues, decreased home sales, and builder challenges continue to cast decade-long shadows over the sector, especially in low-rise residential areas. Governments and the private sector are working closely to try to find solutions to the housing crisis, and it's going to be important to keep an eye out on emerging opportunities while staying aware of the broader market challenges. Whether you're looking to invest in new construction, multifamily, land, or you're considering to sell, working with a full-service investment and marketing team like Shoreview is not only going to allow you to understand some of the opportunities, but also provide you with access to them. I hope you enjoyed this week's show report. Your real estate update in a minute or two or three. I'm Robert Yannerchak here from the Shoreview Real Estate team with the latest scoop on the Southwestern